Hello, I'm Piyush Dave and I'm a fintech professional. Today I'm going to show you one more algo trading strategy, and that basically called as a gradient convergence strategy. Now this strategy is based on a core mathematics called as a gradient descent. Now this gradient descent is a logic where we try to find the optimum value. So there's a small maths involved into it, but I made it very simple for you to understand without the use of mathematics. So what I have done for even non-technical people, those who does not understand the mathematics of gradient, I have made it in a very simple statements. So I'm going to show you the statements, what is the exact meaning of a gradient and how we are going to apply this gradient descent method to our algorithm trading. Okay, now what this algo is doing? This algo is doing a very simple task. It taking a few prices. It is noting down the few prices which is continuously changing from stock exchange. Okay, so it's checking the price continuously. It will calculate the average of last five price. Okay, it will calculate the average. So the price is changing from exchange. We are going to simulate this also, and the algo is calculating that five prices, and algo will consider this change in five prices average as a fair value. Okay, the logic is very simple. Now this is basically what is a one kind of a method which we are going to use in the gradient descent mathematics. So the logic is very simple. The price which is coming from stock exchange, if it is higher than the average, we will consider the stock is overvalued and we will sell it. If the price of the stock is lower than the average, we consider the stock is undervalued and we will buy it. The difference is called as a gradient, and the trade size we can decide like this. The bigger difference, the bigger reaction. The smaller difference, no reaction. So the logic is very simple. If the price is high than the average, sell it. Price is low than the average, buy it. Price is stable, do nothing. And it continuously do this process. Okay, so I made this for running this for 100 seconds. So after 100 seconds, it will show us the profit or loss. Okay, so it will take a trade continuously based on this logic, and after 100 seconds, it will show the profit or loss statement of what is happening into that 100 second. After 100 second, if there's a profit or loss, it will continue the cycle till we reach -5% of total investment. Like, I have used a capital over here is 1 lakh rupees. So if there is a loss of -5,000, I will stop this strategy. Okay, why this stop is required? To manage the risk. One more thing which I want to add, this algo is not run alone. So we will run multiple algo strategy at the same time. So sometimes some strategy works, sometimes some strategy does not work. But our logic is to stop when we actually reach to our threshold of loss. For the profit, we can run up to the level we want. So concept is called run the profit and book small loss. That's the concept of algo. Okay, now let me show you this practically, how it is happening into actual part. So let me show you this into a simulation environment. I have created two Python file. The first Python file is a simulation of an exchange. So this code change price from 1000 plus or -3% maximum fluctuation. So this will act as exchange to us. So I will run this and we'll keep on changing the price. Now this generation of the price is so random, we don't have any control over it. Okay, so we don't have any control over it. It keep on changing continuously. So this is a price which is coming from exchange. Okay, the price is continuously updating automatically. And then now it comes that this price is automatically gets saved into this JSON file. Now I'll come to the next file, and that next file is ALGO. So I'm just opening the ALGO. Whatever I explained to you, that I have basically taken into the logic of this. Okay, so I'm going to run this ALGO now. I'm going to run this ALGO now. Now this will run parallelly to the price. So let me close this and make this window parallel to each other. So this is my in the safe mode, because I've given the name as a safe mode because I am stopping it after certain losses. So that's why this is in a safe mode. So this is a algo has started. It has taken some steps, and let me show you the price also. Okay, where is second window? We have second window over here. Okay, this is a price change continuous. Okay, and you can see the gradient conversion algo is started, and it's taking action. So this is my gradient. You can see here it has sold it again, sold it because the market is continuously going up. So that's why it is continuously selling it. Okay, it is so if the gradient is positive, it is going to sell the stock because the price of this is greater than the mean price. So until and unless we are above the average, this price is above the average, we are continuously selling it. And you can see here, this is buying also happened. Now this buying has happened due to the gradient is negative. What is the meaning of gradient negative? The mean price and the market price, when I subtract it, like you can see this is the price of the market and this is the price of our average. And when we subtract it, if it is coming negative, then we are going to buy it. And if it comes to positive, then we are going to sell it. Okay, we have a loss of 2000 rupees in our first cycle. Okay, so now the second cycle has started. See, market is going continuously up and we are keep on selling the stock. That's why we are in the loss. We are keep on selling the stock. Okay, so that's why we are in the loss. Okay, now here also the price is going up continuously. We have the average mean price over here. See, the logic is very clear. We just need to check the price and the mean price. If the price is greater than the mean, we will buy the stock. If the price is smaller than the mean, we will buy the stock. If the price is greater than the mean, we will sell the stock. That's a very simple logic. Okay, it is now running as a second cycle. The market is continuously bullish. You can see the stock has come almost more than uh, 2% up. Okay, so we are in a second cycle currently. We have started with 2000 rupees, sorry, 1 lakh rupees as a capital. Okay, let's see what is happening in the second cycle. We have told the algo to stop after 5% of total capital loss. So now it will show us the next cumulative capital loss after 100 seconds. So every 100 seconds it will check whether my loss is beyond the value or not. Okay, so now we have reduced the loss to minus 600. You can see here the loss in the first cycle was minus 2000 something. Now we reduce it to minus 600. So it was continuously taking the step, selling, buying based on the logic of gradient. And now you can see the loss has been reduced. So logic is we have started with the capital of 1 lakh rupees. See, we can run our profit, that's a logic, but we will cut down our loss. Once we reach to certain capital loss, we will stop it. But this algo can keep on running whole day in all 375 minutes of the market if our loss does not reach to a threshold. And it is going to make a profit for sure. I have back tested it so many times. So it is going to make a profit for sure. But you need to keep on running this till we actually reach to the requirement. So currently we are still into the loss uh, because the initial loss was very high. The market was continuously trending in one side. Okay, that we don't need to worry about. See here, the price is now continuously in one value, so that's why it is not doing anything. So when we have the price continuously in one value, it do nothing. See, direct the profit has changed to almost 2000 rupees because there was a huge gap in the price. Okay, now currently we are still in the loss. Still we are in a control. So we have taken third cycle. So likewise, this cycle is continuously going and going until uh, we want to stop, or we have given the instruction as a risk management to the algo that we are going to stop it after 5% of the loss. I have back tested it so many times. Almost we are reaching to here 5%, but it will again try to help us to come out. See here. Okay, let me run this cycle completely. Then we will stop recording this video. So I have backtested it almost 375 minutes a day, 2 to 3 days continuously, and it has shown a profit at the end for sure. So the logic is you need to run it continuously for a complete trading session. Then the complete backtesting for a multiple day it works. The algo logic is very simple. Okay, and after every 100 seconds we are again checking our loss also. That means we have basically cut down our maximum risk involved into it. Okay, now if it takes a long lap now, then we will going to be in a profit for sure. Like here we have taken a long lap and we are in a profit of good profit. You can see here when the price jump like fast, then there's a huge profit to us. You can see, you can check out here. Okay, I kept only one quantity. Okay, now we are in a loss of minus 3000. Okay, no worries, still we are in control. So this is keep on running uh, for a full day. And uh, okay, so okay, see here. So for it is not waiting for 100 seconds. We reach to our threshold and directly we stop. So that's the best part of the strategy. Okay. So the next part is you can again start this if you're okay for the next uh, lap. Then you can again start it. See, the best part of the video is it has shown everything to us. It has shown uh, minimizing the loss. First, in the first lap, it has minimized the loss because the lap which has been taken was very high. You can see the major profit in one stock we have taken, one quantity we have taken. The next, it has again come to the negative, okay, sharp negative, and we reach to the final, that is stop loss triggered. The beauty of the recording is automatically it has shown the worst. It has shown all possible happening into the algorithm. I hope this concept is clear to you. Thank you very much.